Hi, this is Pete Thompson with ptmortgage.com and welcome to the Video Home Buyer's Guide. Today we're going to talk about how to qualify for a mortgage or what it takes to qualify for a mortgage, and we're going to go over one of the biggest issues that people have, which is credit. And credit is such an important factor in our lives in so many ways. Now it's a matter of getting a job, of getting an apartment, doing anything you want to do. Your credit is likely to be pulled. And it's one of the key elements or key factors in getting an approval for a mortgage. And what we're looking at when we look at credit is a couple things. First of all, we're looking at what your overall credit report tells us, but we're also looking at kind of a shorthand, which is the credit scoring. And most mortgages now are approved with an automated process. In other words, we put in all the information, it runs the credit, it takes all of the information together, and it says whether this is a good loan or not. And when we're looking at that, the FICO scores or credit scoring is a key element of that decision. And credit doesn't have to be outstanding, but it depends upon what type of mortgage you're looking at. Credit is very, very important. When I talk about credit scoring, and you hear the word FICO scores, FICO is only one of the scores possible. There's actually 3 different companies that store credit, or called credit repositories. And these are TransUnion, Equifax, and Experian. And each one of these has their own version of a FICO score. And what the FICO score is kind of all your credit history, how long you've had the credit, what your credit report is as far as do you pay your bills on time, what your balance is. Everything you have is distilled into one number. And these FICO scores range from a low of 350 up to a high of 850. But most people are going to be somewhere in the middle. You're looking for excellent credit, which is going to get the best rate for a conventional loan. You're looking at about 740 or above, but you can go down to 700 without really having major hits. If you go below 700 on a conventional loan, the pricing is going to get higher. If you're looking at an FHA loan, you can go lower than that. And the best pricing and the best is going to be about 640, but we actually do have programs that'll go below that 640. But when we talk about these FICO scores, the FICO scores are actually divided into 5 different categories. And the first thing is your credit history. And what that basically means is, do you pay your bills on time? It's how many payments have had problems? Do you have any judgments, any repossessions? Are there any black marks on the credit? And that's going to be about 35% of the total credit. But what the surprising thing is that you could have excellent credit history, you could have never made a late payment in your life, and you could still have kind of a mediocre credit score. And a big reason for that is the second category, which is the credit balances. And your credit balances count for about 30% of the overall FICO score. And what that means is the higher the balance you have on a line, that's going to hurt you more. So in other words, what they want to see is somebody that has a lot of credit available, but isn't using a lot of credit or hanging on to credit on a monthly basis. So if you have, for example, if you have a credit card and you have a max amount that you can borrow up against, up to say $5,000, the best scores are going to be if you have 1/3 of the balance. If you get up to that $5,000 balance, you're actually going to your credit score is going to get hurt quite a bit. If you go over that balance, and the credit cards companies will let you go over the balance, but they'll look at that as in default. So one thing you can do to get your credit score higher is just pay down those balances or spread them around over a number of cards instead of having one where you're up near the balance. The third factor we look at in credit is the length of the credit. And what we're looking at there is you're going to have a better score if you have a long history of credit And that means not only, what all your credit is, but the credit for each particular item or particular, if it's a credit card, how long have you had that credit card? One thing that people do that's often a mistake is they want to clean up their credit, or basically they have too many lines that are open. When you cut a credit line that you've had open for a long time, that could actually hurt your credit, even though you're getting rid of something and it's less potential. The fourth factor that we look at is the type of credit they have available. And what that means is if you have all credit cards, that's not looked at as good as if you have a combination of credit cards, maybe some car payments or other installment payments, and a mortgage. And once you get a mortgage and you start paying it off, that's actually going to help your credit score by a lot. And then the last thing we look at is inquiries, or how many people have pulled your credit to look at it. And this can be looked at as somewhat of a negative because when you pull the inquiries, it means potential new debts that you're taking on. But this isn't a big factor in the score. We're looking at about 10% of the score is made up by the inquiries. And if you have good credit already, it's not going to have a big impact. If you have bad credit and you're pulling a lot of inquiries, that means you're trying to buy yourself out of debt with more debt, and that can really hurt your score more. The good thing is that credit is basically just by paying your bills on time and doing what you're supposed to, it will improve over time. So the older something is that's a problem in the past, the better off it's going to be, and just over time you're going to improve your situation. But if you're looking to buy a home, really what you want to do is you want to talk to a good qualified mortgage lender as early as possible and pull the credit so that you can have a review of exactly what the situation is, if there's something that needs to be done. And there are things you can do to improve your credit. You need to work on it early. I talked to a lot of people that have actually gone out looking, they found the house that they want to, we pull the credit and there's problems and they're not going to be able to do anything for a while. So what I would suggest is if you're looking to do something, start early and make sure that you have time to get things fixed if you need to. So again, this is Pete Thompson with the PT Mortgage Group at Prospect Mortgage. Stop by our blog, ptmortgage.com, and we have all sorts of information about credit and everything else to deal with mortgages and buying a home. And if I can help, please give us a call. You can count on us to get the job done right. Thank you.